Bitcoin market cap just recently crossed $1 trillion mark. The total cryptocurrency market cap just crossed $2 trillion. This is a remarkable amount of money to be parked in an asset class that didn't even exist just 10 years ago. Now, a question that I get asked by many doctors is, have you invested in cryptocurrency? Have I already missed the boat? Because they hear about all these people that seemingly make millions of dollars overnight. And another question I get asked is, should I invest in cryptocurrency instead of traditional wealth building assets like real estate? Listen, I make a lot of active income being a doctor. With my two hands, I do root canals. I make a good amount of income doing that. I also manage my practices, hiring doctors and doing a lot of things that I actively have to wake up and do and physically be there for to make money. But I've also, over the last 12 years, I've been investing heavily in real estate. And let me tell you something, it's way easier to make money through real estate, passively investing, than it is working as a doctor. But then when all of a sudden I hear about people making literally hundreds of millions of dollars and Bitcoin's gone up 20,000% in 2 years, and I'm like, the returns in real estate is not even close when you're looking at this, and I'm torn. Should I chase after this shiny new coin or go with what is predictable, tried and true, has already given me some level of success? And I know in a business that has made more millionaires than anything else. So this is the predictable, tried and true way to make money. By the end of this video, we're going to discuss the pros and cons of investing in cryptocurrency specifically versus multifamily real estate. And by the end of this video, you should have an idea on how to make an informed decision on what's right for you. Hey guys, welcome back to the channel. I'm Johnny Walker. I'm a successful endodontist with multiple practices and a multimillionaire real estate investor. By investing heavily in real estate over the last 12 years, it's allowed me to take a step back from my clinical practice, spend a lot of time with my family, take my kids to school every morning, and we go on 6 to 10 vacations per year. It has also allowed me to spend time doing what I really am passionate about, investing in real estate and teaching my fellow dentists on how they too can get the vast benefits of wealth building principles of real estate investing. Now, I've invested in almost every type of real estate out there. Started with single family homes, went on to commercial properties like parking lot, strip mall, warehouse, industrial land. And finally, I came across the asset class that I found to be the best, not only in real estate investing, but in overall investing. And that is multifamily buildings or apartment buildings. And we're talking about 25 units minimum and up to 100 units, 200 units under one roof. Now, why are these such a great investment? Number one, it's a recession resilient investment. It doesn't matter if the market's doing good. It doesn't matter if the market's doing bad on a national level. It only matters what's happening in a local market. And right now in America, we're in an affordable housing crisis. There's just not enough affordable houses for people to live. And as a result, if you have a scarce product, which is affordable places to live, in a market that's growing where people are moving there in droves, that only drives up asset prices. It also decreases the chances of you ever getting zero money. The rent will always come in, and that's why it's recession resilient. In bad times, when people can't afford to buy homes, when people are going on foreclosure and short sales and they're losing their homes, like in 2008 during the great financial recession, where do they go and live? They go and live in apartment buildings. So that's why during bad times, they do even better than good times. All right. This is an asset class that only the wealthiest people in America have been investing in over the years. And the reason is you had to be an ultra high net worth individual in order to invest in multifamily real estate apartment buildings in the first place. But thanks to the Jobs Act of 2012, it now opened the doors for accredited investors, which most dentists would fall into that asset class, and allowed us to now tap into this asset class that formerly we couldn't ever invest in. The rates of return in multifamily real estate are extremely high on a risk mitigated basis, which means on the level of risk that's available, the amount of returns are very high. Now let's compare that to cryptocurrency. Cryptocurrency can blow away the returns of what we can make in real estate. Why waste time making multiples of 1.8x, 2x on our money when we can get 25x in 1 year. So let's talk about cryptocurrency. People left, right, and center seem to be making money hand over fist. So why not invest in that instead? In this video, we're going to compare real estate investing to cryptocurrency on 5 parameters. Number 1, cost of investment. The cost of investment for cryptocurrency can be very low. You can invest as little as $50. You can open an account on Uphold or Coinbase or any of these type of accounts, and you can go and buy a fraction of a Bitcoin. For example, a Bitcoin might cost $50,000, but doesn't mean that you have to go and pay $50,000 and buy one Bitcoin. You can buy 0.1 Bitcoin for $5,000. You can buy 0.01 Bitcoin, 1/100th of a Bitcoin for $500. So the entry level cost is much lower. In minimum investments in a multifamily real estate investment, a syndication on the other hand, minimum cost of investments can be as low as $25,000, more likely $50,000, anywhere up to $100,000 to $200,000, depending on the size of the deal and the nature of the deal. The entry level for cost is much lower for cryptocurrency versus multifamily real estate. In addition to this, for multifamily real estate, for most offerings, any investor can't just invest in it. You have to be an accredited investor. And what that means is that you have to have at least a minimum income of $200,000 per year, $300,000 per year as a married couple, and $1 million worth of net worth excluding your primary home. So there are some drawbacks and some holdups that you can't invest in multifamily, whereas cryptocurrency, the barriers to entry are much lower. Number 2, the rates of return. The rates of return, like we discussed in cryptocurrency, the sky can be the limit. There's literally people that have become 100 millionaires, centimillionaires with Bitcoin and other coins. But meme-driven coins like Dogecoin, you know, with the little dog face on the cover, on the front? Elon Musk coin, Shiba Inu. You know the guy from Squid Coin, the creator of Squid Coin? And these are meme coins. They're actually called shit coins in the crypto world because they have no use. They have no value. They have no utility. But memes drive investors to pour money into these coins that have nothing to do with anything, and people make millions overnight. So the creator of Squid Coin made up this coin, had people driving memes around it. It was a meme-driven thing that drove up the popularity. People started buying this. Individuals started buying the Squid Coin, drove up the price. The creator made $230 million and disappeared off the face of the earth. And the price of the coin came all the way down. Same thing with Dogecoin. So even though a lot of people made money overnight, a lot of people lost money overnight. The people that made money overnight is because somebody else lost it. That's the nature of the returns, though. Returns are sky high. Multifamily real estate, you're looking at returns in the range of, depending if it's a cash flow deal where you're getting a lot of cash flow, where it might be as low as 9% on a low end and as high as 25-30% depending on the nature of the deal. I would say an average rate of return in a multifamily deal is anywhere between 12 and 18% per year. The rates of return in multifamily real estate is predictable. It's unlikely that you will get much less than that, and it's also unlikely to get much more. But you know that at these rates of return, very high rates of returns with low risk, that you can predictably build wealth. With cryptocurrency, you can potentially build great wealth, but you can also potentially lose a lot of money. And that's a great segue into number 3, the relative risk. We've already kind of discussed this. As you can tell, when it comes to risk, if you are looking at your hard-earned invested dollars, this is money you've worked hard for, working as a dentist, doing your job, running your business. This is hard-earned money. You have to know for yourself, how much risk are you willing to take? Are you willing to listen? I'm okay with losing this money that I worked hard for, but if there's a chance that I make a ton of money. Or I know that I can predictably invest this, and I know that I'm going to make X, or roughly around X amount of dollars, and I can roughly build a portfolio of wealth that I know that I need to retire on the low end of the risk scale. So you have to decide what type of risk that you need. You got to remember, when you're talking about apartment buildings, you're talking about multifamily real estate, the demand for that product never goes away. People always need a place to live. This is a basic human need, human shelter. It's a need that never goes away. As long as people are around, they're going to need a place to live. Cryptocurrency is an idea on a computer. The computers go down, the power goes down, global internet shutdown, then the value of cryptocurrency is zero. Your stock market is zero. Then all that's left is tangible, hard assets, real estate. Number 4, value produced. Now, when you're investing your money, do you care if your money is making you a lot of money and it doesn't matter if they're doing atrocious things with that money? For example, if somebody says, hey, I'm going to give you 200% return on your money every month, and I'm going to use this money to go get slave child laborers to work and mine diamonds. Are you okay with that? For most of us, the answer is absolutely not. Would you want to support that type of thing? How about if it was a company that had a puppy mill that was taking cute, adorable puppies and skinning them alive to make dog fur coats? That's not right. You can't do that to little puppies. Now, this is obviously an extreme example, but think about how much money is parked in cryptocurrency. I said at the beginning of this video, $2 trillion are in cryptocurrency right now. And what value is that producing for society? Nothing. It's a bunch of people speculating, hoping that it's going to go up in value. And they've parked $2 trillion there. It's not helping world hunger. It's not helping fight disease. It's not helping do anything to help the society's qualms. It's not producing any value. It's not giving anybody entertainment. It's not doing anything. And another way to look at it, this is an extreme energy suck. All right, cryptocurrency, the Ethereum blockchain drew as much power as the entire country of Serbia. When we talk about climate change, and as cryptocurrency's influence and adoption into mainstream society continues to grow, the energy use is only going to go up. And the contribution to climate change and global warming and all this is an impact that we can't ignore. Think about what the value you bring when you're investing in multifamily real estate. You are giving families, people, place to live with pride and dignity in clean apartments, clean, safe communities to live. These type of buildings can be the catalyst to transform entire communities into good things. I've seen it happen in investments that we made. So you are providing tremendous value to society, to your fellow man when you invest in real estate. Now, this is something that you can't underestimate or not address. These type of things are important. Our contribution to society is important. And the last one I'm going to talk about is cash flow. With cryptocurrency, there is no cash flow. Zero. The only time you make money with cryptocurrency is if you sell it. When you sell it, you get cash and you get taxed on that money. Long-term capital gains tax. So there is no cash flow with cryptocurrency. With multifamily real estate, these are cash flow machines. Apartment buildings are cash flowing businesses. And when you invest in it, the percentage that you've invested, you get that percentage of cash flow as rightfully yours because you own a piece of that. For example, if you invested $100,000 in a 25 unit apartment building and you own 2% of that building, and that building produces $100,000 of income, that 2% is yours. $2,000 is yours. Passively, it comes directly into your bank account, and often in a tax-free manner. We talk about that in another video. So listen, overall, let's wrap this thing up. I'm not telling you that you shouldn't invest in cryptocurrency. I actually love the concept of cryptocurrency and the debasement of the US dollar with the Feds printing over, trillions of dollars in the last 20 months. And I just see a digital currency as the future. In that respect, I have invested in cryptocurrency. But my cryptocurrency holdings in such a speculative, high-risk investment is less than 10%, I would say, 5 to 10% range, whereas real estate is 90%. If there is a big upside with the cryptocurrency, and I have some Bitcoin, then if Bitcoin goes to the moon, at least I didn't miss it completely, and I do have some exposure to that. But I've limited that exposure. What I do have heavily invested in is the boring stuff. Multifamily real estate, but it's going to keep churning out cash flow. It's going to keep building my wealth as I sleep. I know that I'm getting wealthier and wealthier. That can't be said about cryptocurrency. Maybe it will, maybe it won't. Maybe the government's going to come and regulate it so badly, and now Bitcoin is useless, and we go into a total different cryptocurrency completely. Another digital asset. And Bitcoin and US government and Germany and all the big China and all the big economies say, you know what, we don't accept Bitcoin anymore. Bitcoin is no longer allowed in our markets, and that will be the end of Bitcoin. That's where multifamily real estate, I know that I'm going to build it like this. I know that this is where 90% of millionaires made their wealth. So park heavy in wealth building, cash flowing assets, and do take a little bit of speculative, but take a smaller percentage. That's the video today. Cryptocurrency versus multifamily real estate. Hope you guys got a ton of value from it. Click on the next video to get more completely free. Everything's free. Free wealth building tips curated specifically for dentists, so that you guys can get this information that you really can't get anywhere else on the internet. Not in a way that it's specifically formatted for you as a dentist, from a perspective that we have. This is information that we're not taught anywhere else. We're not taught that in our professional programs, and we're most definitely not taught that by the financial advisors in our lives. What they're teaching us is not the way that the true wealthy in America do it. The truly wealthy people in America, they don't park their money in these type of assets. If you are interested in investing alongside us amongst the best markets in the United States with world-class sponsors, join our free investor club. Go to the website below, it's in the description below, and you can fill out a small questionnaire and you can join our free investor club. You'll get access to our newest opportunities, as well as continue to learn more about this exciting wealth building asset. See you guys next time.